The head of the Federal Reserve just moved gold. I'll break it down and explain to you what's just happened. So gold has just jumped in the last couple of hours, and it all comes down to one line from the head of the United States Central Bank, the Federal Reserve. What did he say, and what happens next? Let's get into it. Speaking at the Jackson Hole Economic Summit, the one I discussed in the previous video, feel free to check that video out if you want any explanation to the importance of the Jackson Hole Summit. At the summit, Jerome Powell said a policy adjustment may be warranted. So in plain English, that means the Federal Reserve may be ready to cut interest rates soon, if the economy needs it. And gold popped very much so. See, as you probably know, when interest rates fall, or even look like they're going to fall, holding gold becomes much more attractive. You don't earn interest on gold, so lower rates reduce the so-called cost of holding it. Hints of easier policy can also weaken the United States dollar, which tends to lift gold prices. That's why traders bought quickly after the speech. Powell did not promise a cut, but he did open the door to one at an upcoming meeting. Reporters on the ground and the market coverage say he's acknowledging risks in the job market and is willing to adjust policy if needed. That's the spark that lit the move we've just seen. Now the big question is, does the Federal Reserve actually follow through? Or was this just a cautious hint? If incoming data on jobs and inflation cools even further, gold could keep its momentum. If the data stays hot and the banks back away, gold could give some gains back. So basically gold jumped because the world's most watched central banker just pointed to a possible rate cut. If the next round of data lines up, this could be the start of the next leg higher. I'll track every move and keep you all updated, so please subscribe, because the next sentence from the Federal Reserve could be the one that sends gold even higher or flips the script. But of course, this is not financial advice and this is speculative in nature. Thanks for watching.